It turns out you can post an all-time revenue record, hike your future guidance by a cool $1 billion, and still watch your stock get completely tossed around after hours. Welcome to Earnings Unscripted. Today is May 27th, 2026, and we are unpacking the Q1 fiscal 2027 numbers for Marvell Technology, ticker MRVL.
Yeah, the market is completely exhausted from pricing imperfection. You really cannot ignore the setup here. They had a 112% net gain over the previous fiscal quarter alone. So by the time the actual earnings dropped, the tape was an absolute roller coaster. It spiked right after the closing bell and then literally reversed the exact minute the earnings call started, closing down roughly 6% against the prior day.
It is classic buy the rumor, sell the news behavior. And just as a quick disclaimer here, this is not financial advice, just our personal opinions while we try to figure out what these numbers actually mean. But Miro, the raw growth is definitely not a rumor. Net revenue came in at $2.418 billion, which is up 9% sequentially.
Right, and almost all of that heavy lifting is coming from their data center segment. That piece jumped 11% to $1.83 billion. They are shipping these custom silicon and optical components as fast as physics allows right now. But the real story is not what they sold today. It is what they are buying to protect future sales.
Are you talking about the supply chain prepayments? Because writing a $1 billion check just to hold a spot at the foundries is, well, it is a massive flex. Remember last quarter when Matt Murphy dared analysts and asked if anyone saw him blinking? Giving suppliers $1 billion up front is definitely not blinking.
It's pure survival, honestly. The CFO laid out a forecast for approximately $1 billion in material prepayments starting next quarter. That tells you the semiconductor capacity bottleneck is severe. If they do not physically buy their place in line, they risk starving their biggest hyperscaler clients. And hyperscalers simply do not wait around.
Right, they will just build it themselves. But if the demand is that frantic, why is profitability... Sorry, actually, let me say that better. Non-GAAP diluted earnings were 80 cents a share. That is literally perfectly flat, quarter over quarter.
Because volume growth does not guarantee infinite operating leverage. Their non-GAAP gross margins actually ticked down fractionally. They went from 59% last quarter to 58.9% today. It is practically flat, sure, but when you're posting record revenues, you usually expect to see at least some margin expansion. And it gets significantly worse before it gets better once you factor in their recent shopping spree.
Right. The GAAP accounting on those optical acquisitions absolutely crushed them this time. GAAP net income fell to $34.5 million.
Exactly. Down over 91% sequentially. The culprit there is entirely M&A related. They bought Celestial II and XCon, and this quarter they had to recognize a $250.7 million hit. Just a single massive accounting adjustment tied to the changing fair value of contingent considerations.
That is brutal. Okay, so they are bleeding on paper to build this ultimate optical networking empire. But what really fascinates me is that they still managed to generate over $638 million in operating cash flow while doing all of that.
They did. The core machine is printing money even if the accounting looks like a war zone. We really need to look at how that cash generation aligns with the physical scaling they're attempting.
All right, let us get into the details on the costs and see what those massive investments are actually buying them.
The simplest way to look at it is that they are buying future-proof... Well, actually, let me back up. They are buying toll booths for a completely new kind of highway. The traffic inside data centers is essentially mutating right now.
Mutating how? Like just way more volume or different kinds of data entirely?
Volume, sure, but really the geometry of it. Historically, you ask a large language model a question, it computes the answer, and sends it back. That is a fairly linear transaction. But on the call, Matt Murphy started focusing heavily on this concept of agentic AI. I mean, he explicitly stated, and this is a quote, "In agentic AI, a single user request may require agents to query AI models many times. So the AI agents are talking to each other internally, thousands of times before they ever talk back to the end user."
Okay, right. So instead of a straightforward
fetch command. You basically have a dozen different AI models throwing data across the server racks at light speed just to coordinate on one single prompt. That has to create an absolute massive internal traffic jam.
Right, exactly. The industry calls it scale across traffic. And that specific scale across bandwidth requirement is literally going hyperbolic, which means the physical copper cables, the optical transceivers, the switch ASICs, all of that infrastructure becomes the primary bottleneck. If the chips cannot talk to each other fast enough, your billion-dollar GPU cluster is just a room full of extremely expensive paperweights.
Right, the world's most advanced space heaters. And that is exactly where Marvell steps in, because they own those physical interconnects.
They do, but here is the part that is genuinely fascinating. They are pushing the physics of this so hard that they actually made an unannounced acquisition just to try and stay ahead of the curve.
Wait, unannounced? I thought we just went over the Celestial AI and XCon deals that completely drained their GAAP income. Were there others hiding in the filing?
Right, those were the massive headline ones, but Murphy quietly slipped another name into the transcript mid-sentence. Polariton.
I completely missed that. What do they do?
It is a bleeding-edge photonics startup. He mentioned they have already demonstrated plasmonic modulator bandwidth exceeding 1 terahertz. That is, roughly speaking, up to 10 times higher than current silicon photonics capabilities. So Marvell is basically buying the fundamental science to solve the speed thresholds of 5 years from now.
Wow. Okay, 10 times faster. I actually love that strategy. While everyone else is scrambling to build the network for today, they are quietly hoarding the intellectual property for tomorrow.
Yes, exactly. And they absolutely have to do it because their entire future target model relies heavily on custom silicon design. Murphy reiterated they are still highly confident in their custom business delivering over $10 billion in revenue by fiscal 2029.
Which is just a staggering number to throw around, but hold on. That custom strategy comes with... It has a bit of a catch, right? Because we were talking about their margins just a minute ago. Custom ASIC chips traditionally have noticeably lower gross margins than your standard off-the-shelf merchant silicone. So if custom becomes the main growth engine, does that effectively cap how profitable Marvell could be in the long term?
That is a very real risk, yeah. You could easily argue that 59 or 60% gross margin is basically a permanent ceiling for them at this point. The evolving product mix just will not allow it to expand much higher. But they are playing a completely different game here. They use this, they call it a blank sheet design philosophy. They walk into a tier 1 hyperscaler and essentially say, here's the baseline technology, let us engineer it however you want.
Right, rather than forcing a rigid prepackaged box on them.
Exactly. And that agnostic approach is proving so valuable that it actually just cracked open the biggest moat in technology.
Okay, you have to be talking about Nvidia. I saw the quick note on the NVLink Fusion collaboration.
I am. Nvidia is infamous for keeping their hardware ecosystem heavily closed. InfiniBand, NVLink, it's all incredibly proprietary to ensure lock-in. But hyperscalers do not want to be trapped in one vendor's physical architecture. So Nvidia actually had to bend. They are opening up to allow Marvell's custom silicon to connect directly into the massive Nvidia GPU arrays.
That is honestly wild. It proves the hyperscalers are the ones holding the real leverage now. They're demanding these customized, heterogeneous architectures, and even a monopoly like Nvidia has to play ball and open up their bridges.
Precisely. It's a massive validation of Marvell's core engineering strategy. They do not force a strict agenda, they just provide the ultimate plumbing. And if you hold the golden ticket to interoperability like that, you can write billion-dollar checks to TSMC and sleep completely fine at night.
So they're fundamentally rewiring the biggest data centers on Earth and casually rewriting NVIDIA's rules along the way. That is quite the narrative to swallow, but considering the market exhaustion you mentioned earlier with the stock price dropping, it makes you wonder how investors actually process all of this long-term maneuvering. So where does this leave them heading into next quarter?
it basically forces them to completely rethink the runway here, because management is guiding Q2 to double-digit sequential growth right out of the gate. But they did not just stop at this year. They took their fiscal 2028 projections and essentially upgraded them to $16.5 billion. That is a $1.5 billion raise, essentially 12 months in advance.
Wait, $1.5 billion. So they are forecasting, what, 45% year-over-year growth for a cycle that hasn't even started yet? That is genuinely aggressive.
It is, and Matt Murphy is extremely confident about it. On the call, he flat out stated, quote, "We expect our interconnect business to grow more than 70% year over year, which is well above their old 50% target. So that $1 billion check to the supply chain we talked about earlier, it makes total sense now. They are physically locking down the foundry space today because they actually believe hyperscaler demand is unstoppable."
Right. It is putting their money exactly where their mouth is. But that is also the central risk, right? I mean, if the big tech companies even slightly pump the brakes on these massive agentic AI clusters, Marvell's left sitting there holding a very expensive prepaid spot in line for chips nobody wants.
Exactly. The thesis assumes infinite data gravity. If they hit that 16 billion target, they look like absolute geniuses who front-ran a capacity crunch. But if the hyperscaler budgets plateau, that ultra-fast toll road is going to feel awfully quiet.
Yeah, an empty highway with a $1 billion entrance fee. Well, it is going to be fascinating to watch how the cash flow digests those actual payments next quarter. Thanks for tuning in and dissecting this with us, everyone. We will catch you after the next print.
Have a good one.
You know, if you want these earnings conversations to just automatically show up for you, following the podcast is definitely the easiest way. We actually generate this entire project using AI, mostly as an experiment to see if technology can genuinely capture the natural rhythm of two friends arguing over a balance sheet. So if there is a ticker you want us to look at next, just shoot a note to earningsunscripted@datamadness.ca or grab that X link right in the show notes.
See you next time.